you have entered the market with a very small amount of money. The fear of taking the first step is way higher. And so, you're very cautious. Now you cannot dig yourself into a big hole. Because if you do, then you need to work twice as hard to bring it back to the same level where you were before. What do? Is there a solution? Yes, but we have a fearful concept that trading is a sort of gambling. And on top of that, you have entered the market with a very small amount of money. Because that's all you can afford for now. And so, you're very cautious. You think once, twice, thrice before placing a trade. The fear of taking the first step is way higher than what you have learned and experienced in this market. See, when your money is on the line, you can't help but to be very cautious, because now you're actually betting on in real terms. Now you cannot gamble. Now you cannot dig yourself into a big hole. Because if you do, then you need to work twice as hard to bring it back to the same level where you were before. And also at the same time, you didn't want to stagnate. You didn't want to stay still. What do? Is there a solution? Yes. In this video, we'll see just that. So like this video. Traders who win in the market, the winning traders, they have a very free mind in the market. When they go and start placing a trade or face the market, they face it with a very clear and a very free mind. They don't strive for an unrealistic target, or they even do not have a very unrealistic expectation from the market. They take calculated risks. They take action, solve complex problems as they come their way. And most importantly, they place a trade. They make trades. In other profession, they set standard targets and then they achieve them and move on. So you cannot stretch yourself to a point where you start to feel that this is not my cup of tea anymore, and you get disgusted, disappointed, and you give it up altogether. That doesn't happen. So there's a wonderful book, Trading in the Zone, where Marx says that new traders, they often find excuses to not placing a trade. They avoid trades, and also they find excuses for not making those trades. You know what is the big problem? The big problem is overanalysis. When you don't know the market, when you don't know certain things, you analyze to a point which is beyond your expectations. You feel that your analysis is not complete. And that's where you overanalyze things. And once this happens, when you start to overanalyze things, you tend to feel that you haven't completed your research, you haven't completed your analysis properly, and you avoid placing the trade. This is mostly because of fear, the fear of loss. You want to make sure that everything is right just before you place the trade. But the problem is, if you shrink down from a problem, you can never realize the goal that you have set out to achieve. This has been the way of life in every walks of life, in any field you go. Stock market is not an exception. You have to take action. But first, obviously, you should have a proper risk management plan in place to avoid or minimize the risks. Make your brain feel that you're not under pressure. And how you do that? You can do that by taking small bets at a time, small trades at a time. Trade with a very small amount. That will ease your pressure here. That will make you feel that, okay, I have very little to lose, and hence automatically you will not be tensed. You will not feel the pressure. Sort your funds for different trades. And once you have sorted them, do not put any amount more than what you have allocated for that particular trade. Because what you have allocated for each particular trade, what you have sorted for each particular trade is your safe zone, is your amount for the safe zone. The moment you tweak it, the moment you put something extra, it's going to build in the pressure here. Number 2, do not ingrain your trades with more emotions than it deserves. Treat it's just like a job. Don't get emotionally caught up and tangle yourself with what the market has thrown at you. Because keeping yourself relaxed will help you execute the trades with ease. Number 3, accept the uncertainty nature of trading. So you will truly never know how a trade will execute until and unless you put your money into it. And this is the acceptance that I'm talking about. This is the acceptance that you should imbibe within yourself. See, many a times we set a target or a stop loss, and you know what it does? It kills our flexibility to execute smoothly. I understand it's very hard to face the consequences that you go through at times in the market. I understand how you feel when things don't go as per your plan. That's fine. That's the part and parcel of the stock market game. That is the part of your learning experience in the market. But the unpleasant truth is, you will find out how hard trading can be, and you'll find that out with experience in the market. Well, meanwhile, if you take calculated risks, minimize the real-time financial consequences, and learn from your mistakes, and if you can do these things over time, you will master the market. All the pain, apprehension, tension, puffing of packets, although I do not recommend that, but still, all of these would pay off eventually if you stick around. All of these will pay off in the long run. So this and the videos listed here in this playlist will help you to be a successful trader in the market. Go ahead and have a look at them right now. As of this video, adios.